gentlemen, and thank you for joining the Bharat Forge results con call for the third quarter 18. I have with me senior team members from finance, operations, business development, and investor relations. Just talk about the performance of the company for the quarter, some of the highlights, and then I will open up for Q&A. So in terms of overall revenue, we had a total sales of about 1,390 crores, which is a growth of about 47% YOY, basically driven by a 33% growth in domestic revenue and a 61% growth in exports. In terms of business segments, both the automotive, that is commercial vehicle and passenger cars, have grown fairly well across the world, and industrials have shown extremely strong growth. Automotive revenue grew by 46%, while industrial grew by 53%. Our EBITDA margins remain strong at about 29.6%. They have expanded by about 80 basis points as compared to the same quarter last year, driven by product mix and productivity, and this is in spite of a slightly dilutory impact of the steel price increases that we have had so far. The profit before tax for the quarter was 3,384 million rupees. PAT was up by 77% to 2,281 million rupees, and I'm happy to report that the free cash flows have been very strong for the quarter, have further improved our balance sheet, and our long-term debt equity net of cash today is now negative at 0.05 negative. Return on capital employed is at 21.7%, and as we had mentioned earlier, we continue to put a lot of effort on product development and new business development and move up the value chain and increasing our share of business with our customers. We have won orders worth 60 million across geographies and applications in the last 3 months. This is in addition to the previous business that we won, that we reported last year. And all of this is outside of the traditional CV business. So it is in passenger cars and industry. We also, during between the last con call and this one, we also opened a R&D center at Myra in the UK, in Coventry, which is for development of e-mobility, powertrain components and systems. As a company, we've been working on developing products and technologies for e-mobility over the last 2 years. We've been building prototypes for a variety of customers, and we now set up this front end so that not only can we develop advanced products and solutions for our customers globally, but also co-develop them along with the ecosystem that is present in Myra. To add to this, we have now signed a investment agreement with EV startup in India called Torque Motorcycles, where we are investing 30 crore rupees to take a 45% stake in the company. And we believe the reason for doing this is e-mobility will take off in India, and the two-wheeler sector will be the first one to start switching, and Torque has very good technology and people and capability, and we want to use this to develop products and create value per vehicle for this new emerging vehicle category, and use it as a like a test case to develop and test our technologies, which then can be expanded to global applications. So that's really all I have to say. Maybe just a couple more things. Our overseas subsidiaries have also done well. We have a total income of 7177 million rupees with a 9% EBITDA margin and a PBT of 205 million rupees. There also we are starting to we continue to see strong traction and strong growth. Our aluminum forging facility that we set up is doing exceedingly well and is also poised for additional growth. That's really all I want to say, and and I think we'll now take your Q&A. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Kapil Singh from Nomura Securities. Please go ahead.
Hi, sir. Congrats on a great set of numbers. Two broad areas I wanted to touch upon. Firstly, on the business, we have seen very strong order inflows for U.S. truck market as well as domestic business for CVs has been seeing strong traction. So what kind of growth do you expect in these two segments for next year and in particularly Q4? And we've also won orders worth $100 million. So when do you expect to hit peak run rate of that $100 million? That would be my first set of questions.
Okay. The US CV market is pretty much at a extremely high level right now. As you saw, the last ACT numbers came in at 44,000, which is 100% growth over last year. From what we hear from our customers, it is expected that the CV market will remain strong for 2018. And 2019 could be slightly lower, but not particularly different. But I think let us focus on 2018 right now because 2019 is still far away. In terms of India, we are seeing very strong demand. In fact, from what our customers tell us, inventory at the dealer level has come down to very low levels. There is a strong demand for the heavy haulage vehicles driven by GST and the infrastructure push. So it is expected that Q4 will remain very strong. Next year should also be fairly strong, and including 19, which will remain strong as a precursor to the 2020 pre-buy.
Sir, also the $100 million that we have won, when do you plan to hit that run rate of $100 million?
That will ramp up over the next 2 years.
Okay. Secondly, wanted to touch a bit upon Torque. If you can share some more details as to, what is the, expectation from Torque as a company also in terms of, EVs. When we hear about them, we also hear that there's a lot of investment required in future. So is Bharat Forge committed to making those investments as well? And then if you can share some more details right now or later.
I think it's too early to share anything more. We have been looking out for someone who has EV capability in terms of technology, design engineering, and especially the embedded systems, etc. And this company has what we think is a competitive position, and we want to work with them in creating solutions and products that go into vehicles. Okay? So yeah. That is our interest. And we are investing in them so that they in turn can then grow their objectives.
Okay, so we will look to maintain our stake in this company?
Like I said, we signed this deal today. It's too early to talk about what we will do and what we won't do. It's a journey. This is a startup ecosystem. This is a new field. So let's see where it goes.
And also, could you share the holding structure for Torque and whether the existing investors are selling out or this is fresh issue?
So we will own 45%, and the investment is 30 crores. More than 80% of that is going into the company. Some of it, the less than 20% is going to take out certain existing investors who want to exit. Some of the angel investors. And the promoters continue.
Okay, what is the promoter holding in the company?
Let's not get into all that.
Okay.
Okay?
Yeah, thanks, sir. Thank you.
Thank you, sir. We have next question from the line of Puneet from HSBC. Please go ahead.
Yeah, thank you and congratulations on good numbers. If you can comment a bit more on the overseas subsidiary side, you mentioned strong traction on the aluminum part. Are other facilities also facing, similar strong tailwinds?
Yeah, overall with the commercial vehicle market being strong and the passenger car vehicle market being strong, there is a fair amount of tailwinds. So I think the facilities abroad are doing well and should continue to do well into 19 as well. I mean into 18 as well,
Yeah.
which is 18, 19.
But the bigger part is that aluminum forging, which is doing better than the others. Is that how one should read it?
Obviously, because that is why we made a fresh investment in that.
Okay. And any update on the Andhra Pradesh facility?
Yeah, we will break ground this month. That's the plan. We are on track. Okay. And by March of next year, we should be, starting to make prototypes and start heading towards commercial production.
Oh, March of this year itself?
No, March of next year.
Next year. Okay. Okay, great. That's all from my side. Thank you.
Thank you, sir. We have a next question from the line of Mahesh Bendre from Kavi Institutional Equities. Please go ahead.
Hi, sir. Thank you for the opportunity. So this quarter volume has been very strong, 65,000 tons. I don't know when, probably this could be the highest in probably our history, quarterly in terms of quarterly numbers. So going forward, what is the outlook on the volume growth in FY19?
FY19, as of what we see from our customers, both domestic and the global, is expected to be strong. So, Q4 will remain stronger than Q3, and then it remains to be seen what happens with India and the monsoon and other things. But as of now, all the signs are pointing towards a strong year.
So, given such a strong business outlook on export and domestic side and the growth we are reporting, are we going to face any capacity constraint next year?
No, we will not face any capacity constraints.
So, what could be current capacity utilization?
Our current capacity utilization would be slightly above 75%, maybe in the region of 77, 78%.
Sure, that's helpful, sir. Thank you.
So, we installed a new press line less than a year ago for Pascar components, so we have expanded our capacity in that area.
Sure, sir. Thank you, sir.
Yeah.
Thank you, sir. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. We have next question from the line of Anupam Goswami from Stewart and Mackertich. Please go ahead.
Thank you for the opportunity and congrats on the great set of numbers. So I wanted to know if on a consolidated basis, how much your revenue segment that comes from automotive and industrial?
A consolidated basis. Industry. On a consolidated basis, I think it would be 60% automotive, 40% industrial.
And so in the industrial, and again, in how much you are mostly, getting the revenues and demand from? Is it from the oil and gas or defense or aerospace?
No, there's no defense in this. Largely it is construction, mining, large diesel engines, rail, and oil and gas.
Okay. So any capex plan that is anticipated in the near future?
Yeah, we have a capex for this year of about 360 crores, and we will be spending a similar amount next year.
Yeah, that was what was told earlier. You are sticking to that, or like you are adding up more?
No, I think that's about it.
Okay, sir. So one more question, sir. About there was a winter test of some artillery that has gone for the winter test. Any status on that, sir?
No, nothing that we can. It's still under testing, but it should be very shortly. It should be complete, but it's going well.
Okay, sir. So that's all, sir. I'll come back in the queue.
Thank you.
Thank you, sir. We have next question from the line of Puneet from HSBC. Please go ahead.
Yeah. Thank you so much. Can you give some more color on what kind of revenue run rate are you doing for oil and gas sector now?
Roughly about 170 to 180 crores a quarter.
Okay. And Your passenger car business has also, grown quite sharply. Is the margin profile largely similar, or are you seeing some different numbers there?
See, the margins as a company, let's not look at margins in an individual sector. Okay, because one thing balances something else out. And you have to also look at the return on capital employed. Because the asset turns in certain sectors is much higher than certain other sectors.
Okay. So for this, is it fair to assume higher asset turns?
Yeah.
Okay, that's great. Lastly, on capex, this 300 crore, what is it really aimed at?
360 crores or so is mainly at passenger cars, value addition, machining, and certain debottlenecking.
Okay, so possible to break up between machining and...
No, I'm sorry, we can't share that.
Okay. Great, that's all. Thank you so much.
Thank you, sir. Anyone who wishes to ask a question may press star 1 now. We have a next question from the line of Bharat Gyanani from BNP Sharekhan. Please go ahead.
Good afternoon, sir, and congratulations on a very good set of numbers. My question pertains to the overseas subsidiaries. CY17, I just want to share, CY17 was a good year. We saw, I think, close to 400 to 500 basis points kind of an improvement in the EBITDA level. So, would you like to comment on CY18 margins?
CY17 was driven by a combination of the ramp up of our aluminum business and overall improvement in performance in the rest of the business as well. In CY18 also we expect this to continue, and we should see a slight improvement in margin and overall top line also going forward.
Okay. Thanks and all the best, sir. Thank you.
Thank you. We have next question from the line of Anupam Goswami from Stewart and Mackertich. Please go ahead.
Thanks for the opportunity again, sir. So I just wanted to know what is your the value of content that goes into one classic truck. What could be the one value of it?
It really varies by customer to customer, so it's very difficult to share. And I personally don't feel comfortable sharing that level of detail.
Okay, sir. And one more thing, sir. In the US, has you gained market share basically?
Yes, we have gained market share because we are growing, higher than the underlying market.
And in the presentation also you mentioned that you have made new products and developed that also has a good demand in the customers?
Yes, absolutely.
Okay, sir. And one more thing, sir, there's a lot of, in India, there's a lot of railway modernization and thing is going on. Are you getting any traction in that sector, railway?
Sorry, sir, I didn't understand your question.
So in India, that railway modernization and upgradation that is going on, are you getting a good demand from that segment?
Yeah, on the diesel locomotive side, we are getting a lot of business, and other areas in the rail where we make components, we are seeing tremendous demand.
Okay, sir. And sir, any new geographies or have you entered from the last few quarters? New markets that you have?
No. We are present in most parts of the world, so I think we're more or less covering most of the geographies.
Okay, sir. That's all. Thank you very much.
Thank you, sir. We have next question from the line of Mahesh Bendre from Karvi Institutional Equities. Please go ahead.
Sir, thank you for giving opportunity. Sir, in domestic market, most of the truck manufacturers are indicating that the demand was very strong and last quarter, and in fact, even the Ashok Leyland on the conference call also mentioned that they could not supply few products because of the vendor side. So, is this what you also witnessing, that the demand from the domestic commercial industry has been showing up?
Obviously, it has been very strong. The customer himself is saying that, so it's a fact. But we have managed to supply whatever our customers have wanted. There are certain other suppliers who have not been able to meet certain, proprietary product supply. So that has hampered certain customers, as you mentioned.
Sure. And sir, we have been talking about defense for many years, but do you see when this segment will start contributing meaningfully for us?
See, please understand, we are one of the few companies which has actually developed products from scratch and tested them. Now we are field testing them. So hopefully, we're towards the end of, the cycle.
Sure, sir. Thank you, sir.
Okay? Thank you.
Thank you, sir. We have next question from the line of Kishan Gupta from CD Equisearch Private Limited. Please go ahead.
Good afternoon, sir. This is Aishi from CD Equisearch. Sir, how would you explain 46% rise in your Indian CV revenue last quarter when the CV industry reported volume growth of 21%?
Market share growth plus new products.
Sorry, sir?
The market share growth plus new products.
So could you elaborate on the new products?
As we mentioned earlier, traditionally we've been making, front axle beams and cranks, and now we have introduced other products which are used in driveline, in powertrain, etc. And there is a move towards multi-axle trucks which has a higher, let's say, number of products going into the same vehicle, per vehicle. So that these two have increased our revenue.
Okay. And so what will be the impact of US's inward-looking policy on your business?
I'm not aware of any particularly inward-looking policy. I was in the US just last week.
So like they are encouraging more of products being manufactured in US itself and, putting up trade barriers.
If you have something specific that pertains to our industry and our products, please share it with us.
Okay, sir.
Okay.
Yeah. And sir, you mentioned in your press release that better product mix has led to expansion of margins last quarter. So could you elaborate on that?
Sorry, you said product mix? I didn't catch the whole thing. Can you say that again?
You mentioned in your press release that better product mix led to expansion of margins last quarter. So could you elaborate on that?
Yes. So basically, we have a higher percentage of value-added products, and that is what has contributed to better margins. That's typical in our industry.
So what would be those value-added products be?
So same products that we supply.